The opinions expressed on the Custody Queen Show are for informational purposes only and are not a substitute for personal, professional legal advice. The persons discussed are fictional and not based on actual clients.
Thought it was love, had kids in between. You can count on us, we're the Custody Queens. Yeah, you can count on us, we're the Custody Queens.
Good morning, everybody. This is Kristen Holstrom with the Custody Queens, and I hope you are enjoying this marvelous winter Saturday. I know this is my favorite time of year. It's the only time I get to wear Uggs and some hoodies. So I hope you are all enjoying this Saturday. We have a great show for you guys today. We have two guests, and one of them is filling in for Samantha McBride, and that is one of my favorite humans, and it's also my dad, Dane Holstrom.
Hi, and I'm going to do my best to fill in for Sam. We got big shoes to fill.
And don't worry, everybody, Sam will be back next week, so don't worry about that. We also have another really, really awesome guest that I think this is the type of guest that our listeners have been asking us for and really wanting to know more about. So today we have Jack White, the forensic accountant. Jack, can you tell us your firm name?
Certainly. The firm name is White, Zuckerman, Warsofsky, Luna, and Hunt.
Now that's a mouthful.
It most certainly is.
Well, we're going to get all into the details regarding money, how to find it, what do you disclose? We're going to get into all of that in just a minute, but we want to make Jack feel a little bit uncomfortable like we do with all of our guests. We got to kind of break the ice. So, Dane, I'm going to have you start it and ask Jack a true or false question.
Okay. I don't have any true or false
Well,
questions.
let me share my cards with you, Dane.
Okay. All right. The most common blood type is O negative.
I believe that would be false.
I believe you would be wrong. Answer, it's true. And AB negative is the rarest.
Okay.
And Dane loves these, Jack, because he gets 90% of them wrong.
Oh, whoa. Last show, I got all three right.
I think you peeked at the cards.
I did, but so what?
All right, Dane, go ahead and ask me one.
All right.
True and false is not my forte, but give it a shot.
3 strikes in bowling, not baseball, okay?
Oh, I know this answer. Is a turkey.
It's not fun. That's not fun.
Well, everyone knows what 3 strikes in bowling is.
Okay, I didn't. You could have got me on that
another
one.
W
See?
in the Kristen column.
Okay. All right, here's a good one for you. Fortune cookies were invented in China.
I feel like that would be too easy to say true, so I'm going to say false.
And you are correct.
See? It's like you have to not psych yourself out.
Yes.
All right.
They were created, by the way, in the United States.
That is interesting. My kids just eat the fortune cookies and skip the Chinese food. So
Exactly.
All right, well let's get into, getting into what showing us the money means. So Jack, why don't we just start a little bit about what is a forensic accountant?
Well, a forensic accountant, at least in the context of a family law case, is someone such as myself that has training as an accountant, usually a CPA, and we're trained to investigate a body of evidence, normally documents, and provide testimony to the court.
Okay.
All right, let me try to break it down a little bit. So in the family law context, because I know you do forensic accounting in non-family law environment, but we're going to talk about family law. In a family law context with a divorce, the 2 topics that you would typically be involved in is the division of property assets.
Correct.
And potentially in support for a calculation of income.
Yes.
Any others?
Well, there's a lot of subcategories to those.
Sure.
Say. So property could involve tracing of assets, which may be the purchase of a house.
Okay.
Make sure people get the money back that they put in. Could also investigate hidden cash as it relates to income. Could relate to identification of assets that may be otherwise hidden or kind of concealed in some fashion. So there's a lot of subcategories.
Sure. So just to break it down for the audience, if we have a couple they're splitting up, and they have they're both what we'll call W-2 earners. In other words, they get a paycheck, okay? and they have a couple kids and a house, and maybe they have a 401k or something like that, would they typically want to use or need to use a forensic accountant?
Typically not in that context.
All right. And it also would be hard to justify the expense for one, correct?
It would.
Okay. So on the other hand, we have people with millions of dollars in assets and potentially hundreds of thousands or millions of dollars in income. Would there be do you need to have a specific reason to have a forensic accountant with the facts that I just gave you?
Not a specific reason, but in many contexts, a forensic accountant can assist in presenting your case to the court. It's often much more efficient for someone such as myself to gather the evidence, prepare reports, and provide that to the court in a summary fashion rather than having someone such as yourself, provide document by document to the court and asking the court to make their own conclusions. So much easier for me to come in and say, I've looked at it, Your Honor, here's the answer. You can ask me any specific questions you like.
Sure. Now, I'm guessing that it's happened before with you, that the attorney brings you on just because of the magnitude of the issues in the case. And they have lots of assets, lots of potential tracing issues, potential claims of hidden income or hidden assets. And basically they hand you this big bag of stuff and they ask you to go through it to figure out what the issues might really be. Is that a fair assessment?
It does happen sometimes that way.
Okay. I mean, sometimes the clever attorneys spot the issues and they use you to basically provide the proof and the evidence for it.
Yes.
Okay.
Most of my work is in the area of family law, so I'm fairly good at also identifying those financial issues that need further investigation or identify things for the court or yourself to investigate further.
All right. Well, cool. Now, when we're talking about income issues, in my experience, having involvement with a forensic accountant, and let me be clear, Holstrom Block Park and White Zuckerman, as we call it for short, we have no relationship. We've had trials with Jack on our side as our forensic expert and members of his firm, and he's been on the other side probably an equal number of times. And so we have a mutual respect for each other, but there's no professional relationship between us at all. So when you are called in for an income issue where one side is saying, hey, I think that she is hiding money, what do you look for?
Well, as a starting point, we want to at least see that there's maybe something there. Is there there?
Okay.
Often that takes the form of the expenses that are out of line with income. For instance, maybe they're spending thousands of dollars more than their income is or their tax return says. So that's an indication to me that, well, maybe there's something else going on here. Are they living on loans? Are they living on gifts from family? Are they living on undisclosed or underdisclosed income?
Yeah, what I've heard judges refer to it as, do you guys have a money tree? You have a tree in the backyard that you're picking $100 bills off of because you're showing that your expenses are $10,000 a month, but your income is only $6,000 a month. Sure. And that usually blows up in the faces. One thing courts really don't like is people that lie, whether they're lying to the court directly, whether they've lied on a loan application. That's usually where a lot of people get caught, is they go out and buy a new car, and for some reason, a lot of people believe that they need to exaggerate their income. And so in an intent to make sure they get the loan for the car, they just add a little bit to their income. Well, guess what happens in a divorce? We subpoena that loan application, and when the person is just signed under penalty of perjury that their income is $60,000 a year, but they put $160,000 on their loan application, and that doesn't go over well with the courts. Your job then would be to basically prove that it's really happening, though, not just the loan application. You'd have to use a money trail, if you will, to show that money exists or doesn't exist. Is that right? It's
at least what we try to do. We can't do it in all cases, but a lot of the times we say, well, this loan application says you're earning $10,000 a month.
Yes.
Your tax return shows you're earning $5,000 a month.
Yeah.
What are you really spending? And let's try and figure out what the right answer really is.
Okay. And there's a concept in law that we refer to called controllable cash flow. How does controllable cash flow differ from the common understanding of income?
Well, income, the general perception is what's reportable on your tax return.
Okay.
That shows up as your wages or maybe your interest or dividends or sometimes income from a business. Cash flow is something a little bit different in a family law context. It can include business expense or claimed business expenses that are really personal. So someone might claim their auto lease payment as an expense, but that's really personal, or at least a portion of it is. I've seen instances where the children's education is claimed as an expense, or personal cell phones, or clothing, or travel. It could be anything, quite frankly.
Without naming the case, what's the most egregious example in terms of magnitude of dollars you found in controllable cash flow difference from reported income?
I have had cases where there may be a doctor, for instance, that reports he's earning $8,000 a month as salary, $96,000 a year. But if you look into his detail, he owns his own business, and there's another $200,000, $300,000 of other stuff that's just in there. So
and it's personal stuff that he's paying through the business.
Yeah, Sam and I talk about that a lot. Just because an expense might pass the sniff test for your taxes with your accountant, it doesn't mean it's going to pass it when you're going through a family law examination. One of the first things that we at Custody Queens and Holstrom Block and Park do is when we're doing the consult, we ask these questions. Is there a business involved? When I find out there's a business, depending on the details of the business, that is one of the number one reasons that I would reach out to an expert, a forensic accountant, because you want to know what are the assets of the business, how many employees are there in the business, what expenses are included within the business. Those are the starting points. So it's really important when you're having a consult with an attorney. If you have an attorney that doesn't bring up the need for a forensic accountant when you have issues like this, like a high income earner, a separate property business, you need to trace the source of a property that was purchased either prior to marriage or during marriage. A good attorney, a specialist, knows when to hire an expert and when not to hire an expert. And most of us as attorneys, we know when we need to hire an expert for these financial issues. So we talk a lot about these issues on the show. We wanted to break them down a little bit more for you guys in just plain terms so that you can understand truly what a forensic is and what are the issues. So Dane, keep going. I just wanted to break it down a little bit more for the audience.
No, that's perfect. And one of the things I'm going to ask you, Kristen, to see if you agree with the concept is you talk about when to hire one.
Yes.
One of the biggest things that I've seen is you may know the other side is lying and you just really want to go after them, but how high are the stakes? If we're really only arguing about, and I don't want to minimize it, we're arguing about $1,000 a month, that's going to make a net difference in child support of $150 or $200 a month. Do you really want to spend $5,000 to prove your case? And the answer is probably not.
Yeah, that's a conversation that a good attorney will have with you. And Dane actually taught me this very young in my career is, do you want to spend $5,000 to try to recover $5,000? Probably not. It's a better use of that $5,000 to either negotiate a settlement where you get something out of it that will last longer than $5,000. But those are just really important things. And also not only knowing at the time of your case when to hire the forensic, who to hire, who has a good reputation with dealing with that specific issue. What county are you in? Has that attorney worked with those experts before? Because you don't want to get a forensic report that is just a piece of crap. And then you have to hire someone else to try to reevaluate what you've already done and what you've already paid for. So these are all really important issues. And there's only a handful of really good ones out there. And we actually have one sitting in between us today. So it's a very, very important issue.
Piece of crap, is that a legal term?
Yes. 18, 19 years of school plus law school taught me that. No, but I think Dane can attest that we've both gotten reports where I'm like, where's your math that supports this conclusion, and how did you get this conclusion?
And to be clear, I've had bad experience with forensic accountants as well. I've had one that says, well, here's his tax returns. I'm like, wait a second, why did we hire you if all you're going to do is report to me what he put on his taxes? And, they hand you something that's written in crayon or something. So there are good forensics and bad forensics. There are good divorce attorneys and bad divorce attorneys, so be careful.
So if you are listening to this show and you think that your case could use a forensic accountant, make sure you call us, the Custody Queens. That's 1-800-419-7772. That's 1-800-419-7772.
So Jack, you were talking about all these examples of personal income that get kind of hidden from the tax return. So my question originally was controllable cash flow. Is that what controllable cash flow includes, is all those personal expenses that are paid through the business?
It would not only include that, but your regular salary. It can include any business income. It could include sometimes even gifts that are regular from other people.
Okay.
All of those things can be factored in.
So all of those would be considered to be controllable cash flow.
Right. If it's somewhat money going into your pocket or that you're using, it's somewhat controllable.
Or a benefit that has value that you're receiving.
Yes.
Okay.
We get a lot of listener emails, and a lot of them are surrounded with issues that we're talking about here today. And I know that just the other day, we actually got one where it was, someone has a business and it's not in their name, or someone is receiving money and we can't trace it, or we don't know how to actually investigate it and dig deep and find out where is it coming from. Is it a gift? Is it actual money from another business that we don't know about? But what would you do if someone told you, my husband has a business and it's in someone else's name?
Well, I should probably point out first that any forensic works in tandem with an attorney. So it's really part of the team that looks to investigate these things. So It's important to have both pieces, a forensic and a good attorney such as yourself. What I would try to do is direct the discovery to say, these are things I need to look at. Maybe we need a deposition. Maybe we need to subpoena the banks. Maybe we need to talk to family members or whoever we think owns that business to try and figure out what's really going on. How are these people paying for their living expenses? What's reported on their own tax return? Is there some kind of link between themselves and what we think is the business that's otherwise owned? So it's important to really dig in a bit and see what we can find.
No, it's very important, and this is where a lot of these issues come to surface. If I ask someone, do you know how much you and your husband or you and your wife are spending on monthly expenses? Private school, soccer, sports, eating out. And if someone is saying, yeah, I think we're probably living off about $30,000 a month, but then you say, okay, well, how much, do you work? No. How much does your husband make? Oh, probably around $10,000. Clearly, you can see that there's some red flags going up there where all the money is not being accounted for. But a lot of these issues come up right at the beginning. Wouldn't you say, Dane, that most of them do?
Oftentimes, very often a spouse comes in and says, this is what they're going to do. This is what they're going to say. And the scenario that I've seen over and over again, deja vu, is new spouse was around for the prior divorce with their current spouse. And of course, they've seen the game plan in action that was played out in the prior divorce. And so they bring all of that history to you. And of course, the first thing I go to look at is the prior divorce and see what happened there.
Yeah, that happens in custody cases too.
Yes, it does. Absolutely.
Okay, so Jack, what are some red flags to tip you off that someone is hiding money?
Well, we've touched on a couple of those already.
Okay.
Often the filed tax return doesn't really make sense. Does their lifestyle match to what the tax return says? Do we have 12 months of bank statements that show there's very little income being deposited? There's probably something else going on.
Would it be a red flag if they say they make $50,000 a year and they drive up to the interview in a Lamborghini?
I would certainly want to ask at least a question.
Okay.
Or two.
Or maybe is that your car? And if it is, where'd you get it?
Well, that's not mine. It's my cousin's.
That is surprisingly common. I have had cases where they own nothing, they earn nothing, but they're living in a house in Newport Coast driving a Lamborghini. There's controllable cash flow there someplace.
Absolutely.
And one thing I might want to point out is it's not just the financial numbers I'm looking at. I'm not just sitting there in my box digging through bank statements and pouring through electronic files. Part of what I do is also educational. Both to the counsel I'm working with as well as the client. So I'm saying, well, sometimes, as Dane pointed out before, there's a cost-benefit consideration. If I'm starting to look into things and it's really not getting very far, I'm not finding much, it may be time for that conversation of, this might not be worthwhile. Let's just stop looking at this, or at least maybe talk to the other side and see if you can settle something.
And I'll tell you that Jack and his firm are very, very good at that. And it's the same kind of conversation as what we always talk about, tell our clients what they need to hear, not what they want to hear. So even though they were chomping that they did it, that they're sure that we can prove that there's fraud and there's money being hidden, and Jack and his team go into it and say, I don't see it, And if you throw more money out, we might be able to, but I'm not optimistic at this point. And you really need to reconsider the direction that you're taking this case. And I love that about Jack and his firm. That gives me the ability to go to the client and say, this is where we are.
Yeah, I love that Jack used the word education, because that's something that Sam and I actually really pride ourselves on, and the representation that we give, because educating our clients and allowing them to make informed decisions is very, very important. A lot of attorneys, as listeners may know, a lot of attorneys will want to churn and burn and do all of these things that may not be the most effective course of action for your case. So what Jack is saying is exactly what we do here at the Custody Queens. We gather the evidence, we gather the information, we analyze it, then we share it with our client in a way that allows you as the client to make a decision. Now, you'll have some clients that say, I don't care what the cost is, I want you to go down that rabbit hole and I want you to find it, whether it's going to be beneficial to me or not. And then you have some that will really come back and say, okay, well, how much discovery or how many depositions or what is the average cost is it going to take for you to do what you need to do? And what is the percent of, it being very successful? And that is something that's very important to Sam and I. We would love to see our clients on another level, but we really don't want you coming back repeatedly, whether it's for a financial issue or a custody issue. You as the client, you are the captain of your ship. And Dane shared that analogy with me a long time ago. We as attorneys and as specialists and forensic accountants, we want to give you the information to make that decision yourself.
Exactly. So we want to be able to make sure you have an informed decision,
Absolutely.
whatever that might be.
And you'll have two people that have the same facts that will pick different routes.
Well, Kristen's comment about clients who, I don't care, damn the torpedoes, full speed ahead. Those are the clients we usually get a little gun shy about. It's because I don't care if it costs $100,000 and I don't care that I'm only going to win $10,000. Those are the ones that should frighten you as an attorney, because when that result actually is obtained, they're going to look to you and go, why did you let me do that? And that's very frightening, frankly, from an attorney perspective. So you're definitely going to make sure you get a signed, your notification to the client that you warn them of the potential risks in that particular scenario.
You mean like a 3-page CYA that goes over all of, I always put everything in writing with my clients when it involves making an informed decision and or it involves a significant amount of money, which is most issues when you're hiring a lawyer, because you get what you pay for most of the time. But I always put it out there so the client can go read when they're not emotional or when they're not with their kids, and they can really understand exactly what am I getting for this, what is the process, how long is it going to take, and where do we go from here. And I will tell my clients, I'm going to send you a 3-page CYA so that you can't come back to me in a week and say, I didn't know it was going to cost $10,000, and I sure as heck didn't know it was going to involve all of this.
I'd like to circle back on a couple of other areas of law that Jack and other forensic accountants get involved in, because they're maybe not as exciting as hiding money, but still they're very, very essential part of most, and it's very common, divorces. The most common one that I can think of is the classic husband or wife owns a home before they get married. Sometime during marriage, the other spouse gets on title. Then sometime after that, they refinance the loan.
They buy another house.
And then they take money out of that to buy another house and those kind of things. And that brings up concepts of what you and I know, concepts of tracing, concepts of characterization, because under California law, on the scenario I just gave you, that if the person owns the house before they get married, that house is what's called separate property. And without anything else happening, that means if they divorce the next day after their marriage, that the new spouse has no claim on the house. It entirely belongs to the spouse that had it before the marriage. What can cause that to change? And so they stay married for 10 years after that. Now what happens?
There's a fairly good body of evidence and law around these issues, but there's a lot that can happen that'll change that. One of them is simply paying the mortgage.
Why? Why does paying the mortgage change it from separate property to maybe not entirely separate?
It doesn't change the underlying house yet.
Okay.
But the servicing of that debt as you're paying down the principal owed creates a community interest.
And that's because the wages that you're making the day after you say I do, that new wage is now community property. And so when you use that community property to pay on a separate property debt, the community starts gaining an interest in what was a separate property house.
So that will slowly build over time. The longer you're married, the longer you pay that debt service, the bigger the interest grows.
All right. And that creates a concept for your attorney when you talk to your attorney, if you're not going with the custody queens, a concept called a Moore-Marsden calculation, 2 classic California cases, whereby the community can gain a very significant interest over a long period of time when the house, not only from paying the mortgage, but they also get a share in the appreciation of the house over time, which, as we all know, has been very substantial, particularly in Southern California.
Yes, and with that said, that is a great reason to pick up the phone and call the Custody Queens or Holstrom Block and Park. Dane Holstrom is here with us today. He is a specialist of nearly 30 years. I think, Dane, right?
More than 30.
More than 30 years. I just had a birthday the other day, so I know that the more years I've been practicing, the significantly more Dane's been practicing. But if you are, having this conversation with your spouse, are there accounts in the Cayman Islands? Is their income and expense declaration showing that they're only making, $10,000 a month, but their expenses are $30,000? Are random new cars showing up in the driveway? Is their social media representing a picture of, vacations to Bora Bora with someone new, and exotic places that we all know are quite expensive? Those are the things that you need to start writing down, putting in a journal, and then when you make that decision to move forward with your divorce or your separation, you need to call an attorney that knows what he or she is good at, but also knows when they need to hire an expert in their field, or when they need to hire an expert that works with them on these issues in the field.
Now, lastly, and we're getting near the end of the show here, Jack, but I do want to touch on a couple of higher end issues that you get involved in. One of the most common that I've experienced with you and other forensics is obviously a valuation of a business.
Yes.
So what is as a forensic accountant's role in the valuation of a business?
From a forensic standpoint, we'll put a number on it.
Okay.
We'll evaluate what the business owns itself, its stream of income, and try to, in simple terms, put a number on what it's worth.
All right, just to complicate it, so you have a business and it owns hard assets, it owns furniture, it owns vehicles, it owns things like that, and those have a value.
Absolutely.
Okay, and then you have a stream of income. Okay, what does the term goodwill mean in this context?
That's precisely what it is. It's goodwill, which means it's an expectation of continued public patronage.
In other words, you're going to keep making money.
You're going to keep making money. It's going to stay in business. It's going to keep a public presence.
All right. So we've got a goodwill component. We've got the hard assets. We've got cash in the bank. Those are some of the components. Now, does the valuation of the business depend on the type of business that it is?
It can. All businesses generally are evaluated the same way.
Okay.
We look at what it has, what it earns, and if there's a market for a business that's actually can you really sell it in the open market?
What I was getting at, when you value a business, there are multipliers then that you use either on revenue or profits to come up with a valuation. Then the forensic accountant on the other side will do their things. Now, how uncommon do you both come to the same area of numbers?
We're generally in a range that we can bridge in some fashion, but there are sometimes outlier numbers.
In which case, we're having a trial.
We're having a trial, or someone knows something, someone else doesn't. So we got to figure it out.
Right on. Thank you, Jack.
All right, I'm going to cut you guys off there, but it sounds like we might have to have a part 2 in the future because we didn't even put a dent in some of these issues. And I know with today's world, with jobs like being an influencer, with jobs from working remote, there are a lot more cases that need a forensic accountant that are involved. Are you getting endorsements? There are so many issues that we can take this further to. But we are out of time for today. And I had a wonderful time with you, Jack. Thank you for joining us.
Fun to be here.
Okay, well, I'm going to make this really quick because I'm getting the eye that this needs to be wrapped up. But if you need to talk to an attorney, a specialist, and also one that works hand in hand with Mr. White or another forensic accountant, please call us at 1-800-419-7772. That's 1-800-419-7772. And remember, let love rule.